Good evening, all. I'm Epstein with your metal market wrap-up, and this wrap-up is for Monday, and this is the 29th of July, 2024, and the time right now, well, I'm going to just check it, about 6:40 p.m. Central Time. All right, by the way, today the Biden administration finally announced they did buy that 4.6 million barrels of gasoline, and they did it at a great price, under, I believe, $77 a barrel. So great trade. They dumped it when the market was high to keep prices down, and they bought it back. I have the next job for Joe. He and our energy secretary should be traders. It's really that simple. When you look at the gold market, well, the market's back in holding at least the 2,400 level. I'm going to tell you that I still believe that what the market is looking at here is that regardless of who wins the presidency, both candidates haven't given a platform to cut spending. So anything they do is inflationary. We're going to get tomorrow the JOLTS report, by the way. In fact, let's take a look at what we get tomorrow. You get Red Book sales coming out in the morning. We get the Case-Shiller 20 Metro home prices, and all we've seen them do is go up. The U.S. Federal Reserve begins the first day of the monetary policy deliberation. It's a 2-day, and on Wednesday, we get the statement at 1. Shortly afterwards, about a half hour after that, Fed Chair Powell jumps on the press conference, and away the market goes. The Conference Board Consumer Confidence Index comes out at 9. We get the JOLTS numbers, and they're going to come out at 9 o'clock as well. So that's going to be an important number. And API will come out at the end of the day with their estimates, and then Wednesday morning, EIA will give us their energy estimates. But it's now starting to get interesting for the week. Now, remember, Wednesday, you're going to have the Bank of Japan coming out with their monetary policy meeting, same day that we make a move. And then Thursday, we get the Bank of England. So there's a lot going on. That's all I can tell you, a real lot in the way of news. And, you know, we need it because the markets haven't offered a lot of trading. Today was a whipsaw day. I hope you were watching the markets. I was sitting there going, this makes absolutely no sense. I'm watching the ups and downs of traders moving back and forth. Big numbers, by the way, in the NASDAQ. The S&P were up today as we saw the Dow and the Russell give back something. As I said, in the metals, trying to hold on. Now, the copper market's been the weak sister of everything, just can't get a lift out of this. The dollar was up at the expense of a number of currencies. We've been in a free fall in the Aussie dollar, the New Zealand dollar. The strongest gainer of the year. I did a piece today for Bloomberg on the strength of the yen, but I pointed out and want to point out, maybe here, that if you go to the beginning of the year to where you're at, what do you think's been the strongest currency against the U.S. dollar? Any idea? Do you think it's the yen that's come back recently? Nah. I didn't realize it in percentage terms and all, but I read a Bloomberg article today that pointed that out. You know, that's the beauty about AI and data. You can use all this and you see things that you might not see otherwise. In the gold market, the question for me is, does the market get itself back up and through this high before it comes down to 23.58, or does it not even go to 23.58 to get back there? But so far, the momentum is pointing down. You are down for the week so far at current levels, 0.12%. When we look at the chart action, it's pretty easy to see. You've got lower highs and lower lows. And when we put the swing line on, it really shows itself. The battleground is the 18-day average of closes. You fell to it, bounced away, went under it, and today you went back up to basically challenge it. And now the question is, can you get back over it? Even if the market took straight off from here and took out that high, you'd have a lower low, higher high. So it needs a better chart pattern to get anything done, other if you're going to be on the bull side. The bear side's what's in play, with the pros probably selling short into this 18-day average with stops over that high. but you're oversold. So one of the things, like an airplane pilot, before you take off, you have a checklist. I don't know if you realize that, but if you're a boater, you should have a checklist too before you do it. And I've had both my licenses to do both, big boats actually, at one point, and never really took them out. I went to Northwestern University, went to the clubs they had, went to the actual university for a captain's license many, many years ago, got it. And just things I wanted to do to get away from trading. Airplanes, I used to leave at noon. And an airfield's about 35 minutes from Chicago you could easily get to. I was fortunate. I landed a couple of times at Meigs Field. It's gone now. It's where they hold concerts. But fascinating what you can do. And the whole idea is you can't think trading 24 hours a day. Impossible to do it. All right. But when I look at this, that's what it tells me. But one of the checklist items I have is you don't have to trade every day. That's number one. People that do, they're just compulsive. They've got to be in the markets all the time, or they have a technique, hopefully, that's working, and that's what it says to do. If it's not working, why are you doing it? Second thing, I have a checklist with my technique. And if a market's oversold and not embedded, even if the trend is down, I back away. I don't have to have my clients in the market. I can see the trend is down, but that is the part you either embed or you correct that. Pretty simple. When you're in this ratio and you see that it's like this and the market is trading over the 18-day average of closes, which is the red line, I have an automatic bias that gold should be stronger than silver. And when we take a look at the silver market, the SEP silver, you're in a clean downtrend and you're trying actually to embed. All right, you need another day or so, but you're getting to that point. The market that's been the weakest is the copper. It is embedded. That's very bearish. It tells me that the pros are going to sell rallies in the market. But when the red line eventually closes over 21, ideally that'll be the end of this decline and the market will give us a pop. And maybe it can get back to wherever the 18-day average is at that point in time. Right now, if it falls a lot more, the most that even I'd look for, believe it or not, if you, with this embedded reading, if you get another leg down, is to get a pop back to the 200-day average. So I'm just not friendly here. I understand and I teach. This is the zone where the market's going to try to bottom. The word is try to bottom. The trend is down. I'm not a bottom picker. One sign that it's doing so would be to get over 415.60. The last rally high. Would that pick up the Bollinger Band becomes the question. In the platinum market, we have lower highs, lower lows, and in a similar fashion, you have that first challenge of the 200-day average with the Bollinger Band, and I know you're going to say, but it went under it, and I get it. But it also stopped there initially after you gave up the 100-day average in that, fought a couple of days battle, and magically it ran back there today and it paused itself. If you lose the bearish embedded reading in this market by closing over 21, then I can make an argument we're going back to 987.40. The combination right now of the green line, which is the 100-day average, and the 18 of closes. Until that occurs, the bears, though, are in control of this market, looking for even lower prices. In the dollar index, the market is fighting this line. Follow the green line. It's like the Magic Road in The Wizard of Oz. All right? The market held a support line. Yeah, it got through it for a moment, got thrown right back, came down here, beat itself up down to the 200-day average, and then had that 1 or 2 days under it and popped right back. Where's it gone to? It's fighting a battle between all that and the 100-day average. We're still very much in it. You know the dollar's going to be determined in part what it's going to do next by the JOLTS report, the ADP report, private jobs. We're going to see the Challenger grade for the corporate jobs, the Friday jobs report, the Fed on Wednesday with what they're going to say. And I expect to see a Fed that leans into the dovish side, not committing to cutting rates, but they have more confidence in the data. The markets are much more in balance, and the Fed is encouraged, how's that for a good word, by the fall and the continued break in inflation in the United States. That's where I think we're going to be, and that's going to be the fun to play. So how do you get on board this? Well, number one, I'm willing to jump on at any moment, and some of the ways we do it is through our free offers. You'll see my advisory service, and I have to tell you, I haven't done very much since last week. So I'm ready, the funds are ready, I want to deploy, my clients are waiting for me to deploy, and I just want to go. I'm not sitting here and saying, oh, we have to wait for the Fed. I want to see some action. We're not getting it. We're getting back and forth type action right here. If I had to do anything, I'd be more friendly to the dollar. But you can get all these different offers on our website at iraepstein.com, free offers. You then put in your name, your other information, so we could have a place to send it. Everything we do, we'll send you by email. So it's very simple for you to work with, and away you go from there. So this is the way to do it. I hope you take advantage. You can also move your cursor to the top of the screen. There'll be an icon. Give it a click and take advantage of it. I'm Ira. You have a good day.